I'll put this up there on the screen so we can see it. Actually, there we go. We got a little box.
All right, good
I'll put
afternoon,
this
you
somewhere.
filthy apes. Welcome to AMC and ADD, where we buy, we hold, and we screw those hedgies. Today, I have a special guest. I have Froggystyles here with me. He reached out to me on a space call and asked if it was possible if we could do a collab. I, in turn, asked if we could take a moment to get to know him, and so he agreed to that. I think it's important to get to know the people within the community, and I much prefer delivering questions than being the responder. But Froggy was extremely gracious enough to accept, and I'm honored to have him as my guest so that we can have a meeting of the minds. More than anything, if I have a chance to learn something from Froggy today or in the future, then as a community, we probably have gained a wrinkle or two. So, having said that, I'd like to give a warm welcome to Froggystyles. Froggy, is it okay if I call you that, or would you prefer a different name?
Yeah, Froggy's fine, man.
Excellent. How long have you been trading the market, and can you give us a little history on your background?
Oh, I've been trading since like 1996, maybe a little bit before that. Um, I got into basically doing like computer stocks and tech stocks back then, and I did a little bit of like drug companies and stuff like that, like Pfizer, Merck, and because the patterns were very easy to pick up on, and pretty much anything else that was too slow moving or wasn't volatile, I didn't really pay much attention to it. Um, Kind of self-taught, got into it, and I kind of got on a roll, got real lucky with stocks. Like every time I turn around, I get into the right things at the right time, and it just pops off. It's like I can't explain it. Like, like so I started off when I got out of school. I put like $1,150 into the stock market, and I started swing trading it with margin. And by 1 year later, I ended up having $28,000 from swing trades. And so then I went out and took that money and I bought rental properties and stuff like that. And I kind of wish I would have just stayed in the stock market and just kept growing it that way because a skill is better than having rental properties. Just because like the rental properties, you have to do more stuff with them, and I have more interest in the stock market than I do taking care of the rental properties. So um, as I got into that stuff, I started looking like I started learning how to forward think in the market to where you see events coming up and you know it's going to go up and down based upon events. So I started paying attention to uh, like forward thinking events that were coming, and then I just positioned myself accordingly, waiting for the event to make the change. And um, like Tesla was one of them. I had a lot of interest in Tesla, and before it started popping off, like it was being short attacked, and I knew that there was shorts in it and didn't really pay any attention to like what the shorts were doing to the stock. And then when it started ripping, I was like, oh, what's going on here? And then we found out that the shorts were being squeezed, and it was an interesting play. It like became kind of awesome. So then here we come with GameStop, and I jumped into that one because I like video games, and I heard they were going to go bankrupt, and I was like, "There's no way. It's impossible. It doesn't make sense." So I bought into it, thinking, it's cheap. It's video games. People love video games. Have you ever seen a kid? If you take their video game from them, they get angry. Like not even no joke, really angry.
Mm,
And I was like, "There's an obsession there, and there's no way that they're going to go away." So I bought into it. The thing just started shooting up, and I'm at work. I'm like, what is going on here? So like in that process, I heard about AMC and like the lead up to that squeeze. I ended up buying some shares of AMC. I'm like, theaters don't make sense. They're not going to go away either. How they're going to go bankrupt. And but I didn't understand the fundamentals at that point. I just knew that they were cheaper, and I was like, well, I'm going to get some of them too. And then when things popped off and the buy button disappeared, I'm like, this isn't normal. So it intrigued my interest, and I started paying more attention to what's going on. I'm like, how can they take the buy button? How is this right? Why did they do this? Like, is there more to the play? And as I started digging in, I started peeling back the layers, and I started looking. I'm like, there's fraud. There's like some crazy stuff going on here. So I got into it. I started following people and started getting information. I started looking. I'm like, well, they're missing this and this and this, and I'm like, well, let me become a YouTuber, put the information out, see if I can help. And here we are today.
Well, that leads me right into the next question, and it sounds like you were definitely. I mean, I don't even feel right asking you this question after what you just said, but do you consider yourself to be a GME, AMC, Ape, and roughly kind of like? And it sounds to me like you were well in before on GME prior to the run up. Do you have an approximation, or do you feel comfortable talking about an approximation as to when you first bought in?
I think it was probably early January. I'm thinking probably after the 14th because that's when the pop and volume hit. So, um, because like I was following Trey Trades,
Hmm.
and then he introduced me to basically Matt Kors. I didn't realize Matt Kors was a trader, and they were friends. And Trey was kind of cool, and like I was just getting ideas from like just other YouTubers on what plays were available, what was hot, what was not, and Jamie became interesting. And then like I went over, started watching Matt Kors. I started watching Uncle Bruce and like some others, and then this whole mess happened.
Hmm.
So one thing that about me is like ever since that play, I've been pretty much solid AMC almost the entire rest of the way since June because going into June there was a max utilization that popped up just before it ramped,
Mm-hmm.
and I knew something weird was going on. First, I was watching the cash flow because I watch where the money goes. And I'm like, I'm sitting in GME, about 75% of my shares are in GME, 25% in AMC. And I'm like, how come GME don't have the same cash flow that AMC has? Because that means AMC is going to start at some point bubbling and getting hot and popping. And so I was watching it and I'm like, the utilization's going up, up. Okay, it's maxed. And I'm like, well, then it started going 10 cents, 15 cents, 18 cents, and I'm like, it's going to continue to rise because there's, in theory, no more shares available. So I'm like, well, I'm going to go over there with everything because I have a feeling it's about to pop off again. And I jumped in and it ripped. And I'm like, okay, wow, luck again. So, um, well, I got in before the day before BlackRock and Vanguard decided to like 4x their portfolio on AMC. So I got real lucky there. So I got in, I think, like 2 days before that Wednesday that doubled. And so it popped off and went up. And then I just basically sat on it all the way back down. I'm like, well, that was kind of a fun ride. But then it gave me a chance to start looking at it saying, like, what went wrong here? Like, why did it stop? Why is it being manipulated? Is this possible that the market is this corrupt? And then as we start digging into it, it's like, yeah, it really is.
Yeah. I just want to mention people are asking questions already in the channel here, and I just want to let everybody know, like especially Keto said, Froggy, what was the outcome of the poll you did recently? How many shares does the average investor hold? I'll try to answer some, or maybe fill in some questions from the outside. They were just kind of wondering about that. Did you have a? I actually don't know about this poll. Is this how did that turn out for you?
Well, 48% of the people said they have over 1,000 shares. So if you did the math real quick, I mean, if you took and got rid of the whales, the big guys that had like 50, 60,000 shares, that means we average about 500 shares per person, roughly. And that's excluding whales. And that completely destroys the narrative that we only have 120 shares per person on average. And my calculations, we have 4.4 billion shares on the market right now. And that's based upon like different polls, my charts, and everything like that. That's not like some wild and crazy number I made up and said, trust me, bro. Like I actually have a money indicator that I follow, and everything's estimated off the money flow from where it was in January versus where it is now. And the theory of them covering in June, they didn't cover nothing. They let us run up, and then they smacked us by shorting us down more. So there was no covering that happened in June. So it was a complete like farce that it even happened like that. Like um, you could see where they tried to cover in January, then they stopped, and then they doubled down. So technically, if we had 66% short interest, then we should have 130% now. But with them fudging numbers and stuff, and Ortex is only giving us the numbers that is being self-reported, we get this number of 21%, which is 100% a lie. But it's not Ortex's fault. It's the self-reporting. They're allowed to lie to us.
Hmm. Yeah. Um, so going back to that question with the whole GME AMC Ape thing, I just recently did a video where we went back in time. We went back in time to watch and see or try to feel what it was like to live through the moment of GME. And I know this is a random question that I didn't really put down anywhere for you, but can you just kind of describe to us like some of the emotions that you felt when you were going through the whole GME squeeze? Like what were some of the most impactful moments for you as everything? I mean, I'm sure you went from I think January 25th was probably one of the most key days because you were probably sleeping. You woke up, saw that the price had rose from $60 all the way up to 120 or $30, and then had gone back down by the time you had woken up. And you probably were just going like, "My God, did I just miss? Did that go through your head? Did you think, did I just miss out? Did that?"
No, I knew that something weird was happening, but when it pulled back, that's what shocked me. I was like, what was that? And then it ripped right back up, and I'm like,
Right at market
okay,
open.
what is going on? Like, this is not anywhere close to normal. It's either going to squeeze or it's not. And then I didn't realize they were fighting back. And then when the buy button disappeared, and I'm like, what does this mean? I'm like, why do we not have a buy button? Like, because when you see it ripping, that's the first thing you want to do is buy more because
Hmm.
you already know that you have a chance of making more money on that investment. So you want to jump in. So I'm like, I can't I can't do anything. And then I started seeing the price start coming down. I'm like, well, wait a second. If they can't buy, the price has to come down.
Hmm.
I'm like, does that mean that I have to sell to make sure I don't lose any more money? And I end up kind of got forced out at that point because I'm like, it's going to keep going until this gets fixed. And I'm trying to look up these other stocks too that are squeezing at the same time, and you couldn't look them up; they were invisible. And I was like, well, that's kind of weird because like I was wanting to go and pull out of that one and buy one that actually had a buy button. I thought it was just that stock that was messed up, and they were all messed up. I'm like, okay, something's not right. And I didn't think I missed out, but I did miss out by the time I sold. I think I got halfway at, like, it came halfway back down before I popped out.
Yeah, it's interesting. It's interesting the whole emotions that can go on during a play like this when you're seeing it move the way that it's moving, and then you have outside factors happening. It's going to be incredible. It's going to be incredible, and people like you who've lived through this before are going to have invaluable information to share with people because you've lived through one of these before. And I hope you know how important that really is. That information is incredible. I actually don't have that same story. My story starts after January 27th. So my story actually starts on January 28th, which is a completely different story and probably feels a lot like other people's stories out there who are from after June for AMC. Um, but yeah, I hope you know that you have an invaluable piece of information about psychological pressures on trading that you're going to be able to share with people. And I hope you utilize that. Moving on to the next question, though.
Well,
Oh, go ahead. Go ahead.
what
Talk on
can
it.
can I touch up on that real quick?
Absolutely. Absolutely.
Um, so one of the things I've been trying to teach people is to learn how to stay calm and predict what's coming, because having a plan is important. I had no plan at that time. I had no idea that that was going to happen the way it did. So when it catches you off guard and you're at work and your money's like quadrupling and you're like, oh, look, and you're running around the shop and you're like, here, look at my phone, check this out, look how much money I got now. So now there's a order and chaos kind of thing that happens right there. It's a psychological mess because when you're not ready for it, you get that euphoria that pops in that, like you're just you're just making all this money, but technically you've made nothing because you haven't timed your exit. And then like you're in a state of panic at that point.
Hmm.
So you want to stay calm and realize this is normal, but it's hard to do when you're staring at the money and you see several $1,000s popping up, and it's ticking and you're seeing like $500 moves per like up and down movement. You're like, oh. God, like, so the thing is like what I've been trying to tell people is like I know how to trade at that point, even though I was panicking. And I knew limit orders was the way to go to lock in your price so you didn't keep getting burnt. And so I've been teaching people use limit orders and then explaining how this is going to go. Like I play it kind of like a musical chairs. When the music's playing, um, you want to be as close to the top as possible. Now, of course, they're going to try to scare you, and that's their plan is to freak you out, make you panic, and not do anything proper. So your goal is to be more professional and understand that those dips that are coming in are designed to scare you. So instead of selling at that bottom dip, thinking that you're missing out of all them profits, realize it's just part of a cycle. And now, when you get the great big rip, and we'll know when that happens. Like, there's no way they're going to clean squeeze this and pull it back down. They're probably going to be like a bull, and they're going to just hop all over the place and try to buck us off. And that's what I'm expecting is a because they can control it now. Why can't they control it then? I mean, I get margin calls are not as controllable, but this is probably more of a controlled squeeze, kind of like Tesla, but they're not going to be so nice because they haven't played nice since January.
Yeah, I totally agree. Well, moving on to the next question. I've talked about knowing your five whys on my channel. It sounds like you might have some kind of technical background where you may have dealt with this before, but knowing your five whys for being a part of the ape community, and what would you say your reasons are for being part of the community? Like, where does your whys start from, and where do they lead you to? And I know you've had a chance to prepare for this question, so I would assume that you've worked through that.
There might be more than five. I don't know. I'll just start listing all the reasons why I came into the play. I like investing for one, so I came into it and kind of got tangled up into this whole ordeal. But then I remember Occupy Wall Street and that kind of stuff, and that was to fix the market issues. And then you run into the community and you see that this is not normal. Whereas a group of people that are basically helping each other and being there for each other. And this is the coolest part of this whole entire thing is the community, because like there's really good people in here and it's brought everybody together. Even though there is some division, there's still a lot of really good people that we've met along the way, and it makes it a really enjoyable play. Knowing that we're all in it together and that there's a good chance that when it all is said and done, we're all going to make a lot of money. So, like if you know how shorts are played, they have to buy after us, and they don't want to do that because then they just hand us money. They become ideally the bag holder, but they're not holding the bag. They're the ones buying the bag. So they know they're getting screwed. They have to buy it and then destroy it. So that's the same thing as holding a bag, because then we get the cash out on the up. And another part of the why too is I've seen a lot of misinformation going around. There was a lot of like um, a lot of people are putting out information misleading people or misinforming. I don't know if it's intentional or unintentional or whatever the case was. So I figured I'd come in and try to help clear things up, because like you'll see there's some people they might mean well. I don't really know. Like I don't want to say for sure 100%, but I'm just watching them saying like dark pools aren't causing the problem. Yeah, better look again. That dark pools are the problem.
Yeah.
And then I started hearing things like well, the brokers aren't doing this, and I was like, they got caught doing that before. And then I started seeing like people were pointing out information like Fintel this and shorts this, and I'm like, all that's wrong, but you can't figure out the numbers. And I'm like, well, maybe I can make a difference, and I can help teach people. I can get right into the mess with everybody and try to do the best. And then, like I said, we ran into a real nice group of people. As you know, we partnered up with Ape Radio, Tony Denaro, the Maslorian, Pantheon, and CS Trades. We got a nice little group, and then I added in Jackson Hunter and was looking to bring you in as a partner of the group too, because you care about the people as well as we do. And I mean, we're all trying to do our part to help people, and I think that's how we grow together. Well, there's many different things that can actually ruin the day for a shorts. One thing is positive earnings. Like if you notice GME has an 85-cent positive earnings coming up, estimated expectations coming up here in a couple of weeks. Is it? I think it's like 2 weeks or something. And that's going to hurt the shorts. If you're a short, you don't want your company that you're trying to short going back to profitability. And when that happens, you know that your position is very threatened at that point, and you have a chance to suffer infinite losses. And so a short should be scared to death going into the GME earnings because it's going to force an exit. When you take those losses like they did before, GME rocked a bunch of shorts during January. If they rock them again with these earnings and whoever's left still in there, it could actually trigger like a margin call because of the damage done that has to be covered. So you think about it, that could be a catalyst. I don't want to say for sure, but there's got to be damage done to the hedge funds to create the trigger. We got very good market conditions right now. I can't say good conditions because market being down is never a good condition, but their assets are dropping in price while they have to drive down their liability, which is basically all the meme stocks, and that's to offset their assets to liability ratio so they don't get margin called. So it's going as expected, but then you got interest rates going up, which is going to damage their asset value more. They're looking at doing tapering. Supposedly the Fed's not going to be putting any more money in there. You got Russia pulling shenanigans over there. And then if China decides to step in and go after Taiwan, I mean, you're going to have world destabilization, and that's going to cause more panic in the markets, which is going to crush the shorts. And in my opinion, I think there's going to be more pain before we get the gain. And I don't know how much further it's going to go down, but as long as we expect for the worst, if it doesn't happen at worst, then the end result is still the same. There's still a massive squeeze in all of these stocks, and I think it's inevitable because AMC's got Adam has been doing popcorn stuff. I tried the chicken nuggets; those are pretty good. He's I was actually surprised on the chicken nuggets. Like I'm not much of a vegetable person, and I was like, well, I'm not going to knock it before I try it. So let me go out there and try it, get an honest opinion of it. And I took one bite and I'm like, wow, these are actually pretty good for a veggie nugget. Like it didn't have a weird aftertaste. The breading was good tasting. Like the chicken almost tastes like chicken, which is the weirdest part. I mean, I guess that's the whole point of it, is to like be an imitation of chicken, but it was very well done. And I was like, well, I can't knock that product at all. So I did a review on it. Turned out pretty good. And then, like I said, you got Adam Aaron doing what he's doing. Um, the one thing about Adam Aaron that has been pretty impressive is the fact that he went through all of the places that they rent, and they restructured all the leasing agreements or the rental agreements or contracts, whatever you want to call them. He restructured all those to where it's based upon like how much they make and not a set income. So if like another pandemic pops up, they'll be in a better position for next time. And then they also restructured the loans, lowered the interest rates, extended the time, giving them more time to pay stuff out so they have a chance of getting back to profitability sooner. So he's done win-win stuff across the board. And yeah, there's other things that we look at that kind of makes things questionable, where like the shares that are being um, sold in the background and stuff like that. Like right now, they're getting gifted shares or awarded shares, but when they get awarded shares, they create those out of thin air and they put them into the system. And the thing is, it doesn't cost anything of our profits. So it's good in that aspect because it can make the fundamentals look stronger on paper, and they can continue to do this for a long period of time and make the company grow statistically. So it's it's one of them ones where it's like a double-edged sword. It looks bad one way, but then you look the other way, it's good over here. And it's the balance of compromise that they're doing. So it's like you kind of like that model a little bit, the way they're doing it. A little bit. It's different.
Yeah.
Well, I don't like the dilution of shares, but it's only like a couple million shares per year to cover the 100 people that they have that's considered overhead. And 3 million shares a year, most companies dilute their shares by like 1, 2, 3% per year, or on average, and they're diluting it. It should be by less if it's based upon income, but we know that last year alone they diluted by a lot. So they get criticized for it because they were aggressive, but they were trying to save the company, and then they banked a lot of money and stuff. And he's got enough money sitting there; he can do some wild stuff like purchase a lot more theaters. And once he gets this stuff ironed out with getting back to profitability, adding more places is going to be beneficial for adding revenue, which makes more profit, and then kind of helps the company get ahead further sooner.
Yeah, I feel like on this next question that I'm going backwards because I like where you're going with the fundamentals of the company. And by the way, for those of you who are watching and my sound went out, I've got background noise in here, so I'm trying to mute and unmute my mic just so you guys don't have to hear birds or anything like that in the background. but I'm going to go ahead and ask this next question. It's going to feel a little bit of out of place compared to where you just went there, and we'll kind of come back and touch on some of that. But I get asked this question so much. What are my plans for the YouTube channel after MOASS, and what are my post MOASS plans in general? And then what's your plans for your YouTube channel? What do you? I guess I'm just reversing it and saying, what do you plan on doing after this is all over? Are you going to still keep the channel, or are you going to move on to different things? What do you have for a future?
Well, so I like day trading. So I was thinking about probably dabbling more into metals. And because if once you get a big sum of money, you got to actually do something to preserve your wealth. And I do actually have a membership, which I don't recommend to get it yet because this hasn't squeezed yet. But it's designed for preservation of wealth and how to like make more money like after the squeeze, and like do it safely so you're not like just going out and buying Lambos and watching your money depreciate before your eyes.
Yeah,
Like, I mean, it's a joke. We all get to say we're buying Lambos and want one of each color. I mean, it sounds cool, it's fun, but ideally, I mean, you should have a business. You should be looking for a business and a way to like work for yourself, and because that's how you actually become a happier person too. I mean, you can give someone $1 million and they can go blow it in 2 years and be back to working for the man. And my goal is to show people how you can do like e-commerce. You can make products, sell products, and do stuff like that, and become independent and live for yourself. Like what we're doing right now, even though it might not pay very much for YouTube. I mean, the pay is like horrible for beginning YouTubers,
I actually
but
don't know. I get nothing.
but yeah, it's like if you're monetized, it's like 3/10 of a penny per viewer. It's like a joke. But I mean, you got to start somewhere. But if you could wake up and know you can set your own schedule, talk to who you want to talk to, talk about what you want to talk to, and work for yourself, you're going to be happier and you're going to be more enthused to try harder and do more. And I recommend that to everybody, is like build a life for yourself that is self-sustaining, self-fulfilling, so then you're happy. And then if you're making enough to where you're no longer working for the man, you work for yourself, and you like provide for your future, then you have more time, and like you have more happiness. And like there's so many different things that can be done. And like when this is over, of course I'm going to invest in retirement stuff, like Tesla. I like Tesla. I might go for silver if it hasn't already squeezed. That with the way nickel's taken off, I'm kind of worried silver's going to take off without me. But I don't want to FOMO in over there, but I'm keeping an eye on it. And but I want to put money into certain plays that are long-term plays, and then invest into some business so I can actually, afford to live freely on my own. Continue to do YouTube, do day trades. I love day trading. So I want to teach people how to do my charting, my trading, and stuff like that. So then you can learn how to be a trader. And it's not really as hard as people think. All you got to do is learn the charts, and then it's timing, confirmation, picking the right companies, and just not being greedy. Like if you're going to take a swing trade, get in and get your percentages, get out. Don't worry about how much you missed out on. As long as it's a safe entry, safe exit, and lock in your gains. You can do this almost every single day or every other day. And like I said, you can start off with 1,150 bucks. You could pick the right stocks on margin and get that margin. I mean, I'm not recommending it, but that's how I did it. And you could take $1,100 and go to $28,000 with like 30 some trades, and it compounds whenever you do it that way. Now, you don't want to be super aggressive or anything like that. You want to be like, you want to be more cautious and careful. And I didn't do it with options. If I would have done with options, I would have been like 200 some $1,000. Um, but the goal is to learn how to set stop losses, limit orders, time your entries, pay attention to the money flow, and get your swing. That's it. And it's just that's what I want to teach after it's over, and I want to do it myself because I think it's fun. It's not that I would need the money afterwards, but why not make more?
Yeah. Well, that's actually a great lead into the next question, which is, do you think that the market's stable? And if not, what kind of effect or changes do you think on your trading styles will you make for a bearish market?
That's one thing I was wondering if we're going to go bearish for a long period of time, because the way they're talking, that they're going to raise interest rates for basically the remainder of the year, but I don't know at what rate. And then they're talking about tapering afterwards, which I don't know if they meant tapering after the next raise or the last raise. And so that means this might get drawn out for a longer period of time, which basically means bear market. And whenever you're playing a bear market, you got to do it the opposite of what you think. Most people are used to seeing green candles and making money, where in this market, you might be able to make money on the red candles. And that's why two of my emojis on my uh, YouTube is red candle, green candle, because both can make you money. So a, a red candle normally is a good dip buy, and then you can sell on the green candle. And that's one good way to look at it. But you can also play the opposite side of the market where the green candle is your entry, and then you can play the put. Or I don't really do the short thing. But I usually just play puts. I get in, cycle it real quick, and get out. And you might have to do more puts than calls going into a bear market because there's more money to be made there. But that's only forward thinking, and that I'm not used to being more aggressive on puts than calls. So, I mean, I'm willing to adjust to it based upon the way the market's going. Well,
Oh, you
this
know
is
what?
like
And
a
hold on.
two-part.
I'm sorry. I just totally did that again. No sound. My bad. Let me ask the question one more time. Sorry. Interview that I
No,
have.
I heard you.
You heard me, but they didn't.
Oh,
Yeah,
okay.
yeah. An interview coming up regarding share dilution. I'm just going to roughly say it real quick again here. But uh, in an interview I was supposed to have that's no longer going to happen, but regarding share dilution for AMC, from your perspective, no wrong answers. How do you feel about this? Should it be just smaller portions, 1, 2, 3% like you had mentioned, or more of a larger percentage, or just how do you feel about share dilution in general?
Well, it's a two-part answer. It's because there's two parts to it. You got to look at it from the investor's perspective, and you got to look at it from the business perspective. If we completely stop them from diluting shares with the model that they have, they have to share dilute because they pay their their I don't say employees, they pay their upper 100 or whatever the overhead, they pay them with share dilution. So let me see. They kind of need to have that, but there probably should be a better budget plan set in place. Um, because like right now, it does seem like the incomes are set a little higher than they were. I can't say a little higher, a lot higher than they were back in like 2018, 2019. But I mean, I think after the play is done, me personally, I wouldn't care what they do at that point. They can run it however they want because that reflects on them. But I do know at some point, from this is from experience, if you were following Tesla, and nobody wants share dilution, that's just the way it is. If you got $1 million and they dilute 10%, you lose 10% because of dilution. That's just how it works. Now they get the money and it goes on the books and it becomes an asset, and they can actually the price can reflect higher because of that. But it's up for debate on what the shareholders think. And if the investors get spooked by too much dilution, they run. And so that's why they have to do a minor amount to not spook anybody, because no one's going to notice 2 to 3%. But if you do 15, 20%, you're going to hit somebody's pocket. You're going to anger them. So now with the Tesla squeeze, what had to happen there, if you were paying like any attention to that mess when it happened, Elon had to dilute the shares by 5% or whatever the number was in order to lock in that ultra high evaluation of the company. And when you're squeezing and the price is really high, if you can dilute 5% at the top, then you put all that money in your pocket and
Hmm.
it actually locks in that evaluation of the company. So the market cap will stay relatively close.
Can I
And that's
make it
how Elon got all that money. So
like,
there, it's a necessary evil. And at some point, Adam Aaron's going to need to dilute 5% going into the squeeze, or the company is going to get completely crushed coming all the way back down. So if he wants this company to be worth $250 billion or half a billion, yeah, $500 billion, which is be just crazy, he's going to need to dilute like 5% on the way up. So he should be requesting for that amount of shares just before the squeeze if he's smart. And like hopefully he sprinkles them through like Elon did and doesn't ruin the play. If there's a complete dump, then it's obviously going to cut the top off things a little bit and slow it down. But it has to be done for company growth. And like I said, I'm against share dilution, but I understand in his seat, he's going to need to do it. Now, there's been other things that's been suggested, like a rights offering where he offers shares to the shareholders at a discount, and we can go buy those, and it helps pay off the debt. So then he doesn't have to go request a dilution. He can just do it a different way where he offers so many shares to the public. We buy it instead of the market manipulating the price down. Instead
mm,
of diluting the shares, we just hand them the money and bypass basically the market. And it might be more efficient that way. I've been thinking about it. I'm like,
through an
because
NFT?
right
I think a
now,
lot of people were saying like some kind of NFT blockchain type thing where shareholders are offered, some way to pay down. Uh-oh. We lost your sound.
oh, no
There,
sound.
there you are. I hear you now.
I was just being quiet.
But yeah, it's just it was an NFT offering, that could be issued to shareholders to where we could somehow like buy those NFTs and then that be issued towards paying down debt and stuff like that. Yeah, those it's a good idea. It's not a bad idea. I like it better than just simply a share offering.
Yeah,
Um,
I like the NFTs too. That's been like amazing. Like I think having one per movie or whatever, like any of the big movies, I think it would make it a collector's item. And it's historic too, because after the squeeze, we can look back at those and say, I kind of want those for a memory of what we did.
yeah. Um, Next question. I first ran into you space call on Twitter. I believe it was the Ape Radio. Some of these space calls have kind of turned into a hot mess, and there seems to be a lot of drama within the community. With so many differing opinions within the ape community, how do you envision unity to make sure that we keep the common objective of a MOASS alive. Um, like as a community, how should we handle differing opinions or ulterior motives that keep creeping up? Because it does happen. I mean, I don't want to list names or anything like that, but I mean, there's just a plethora of individuals who have differing opinions and different ways that they want to take this, and the dilution, share recalls, and I mean, you could just start naming them all off. But what do you think? How do we have all these differing opinions and still yet maintain this unity?
Well, again, this is going to be another two-part question. Um, there's obviously kind of like there's like in politics, there's like a red side, blue side, and I'm seeing there's a divide where you got this side, that side, and there might be other sides too. We'll just say there's four parts of this pie, and they're all bumping heads with each other, but they all have the same goal, which is to squeeze this play, become rich, make a change in the market, and everybody just wants to win. So you got this one saying we need to try harder, and this one's saying no, don't try harder, and this one's like we should try this, and the other one's like don't try that. And it's like the intentions are all the same. We all want what's best for all of us, but some are wanting to get the cart ahead of the horse, and the other ones are saying let's just drag the cart. And it's like they're all right, but they don't realize that they're thinking, well, since I think I'm right, you're wrong. And it's not the matter of right and wrong. We should be united for one cause, which is whatever it takes, let it happen. And it's going to play out the way it needs to play out. Because everything's so divided. I don't think we even have a clue what side's going to, like, who's going to win in the community to get their ideas brought forward. But the thing that I do worry about is, well, everybody has a different perspective on how they want it to happen. Like, I worry about the infiltration. You got people coming in and misleading the group to try to like scare them into doing things that they wouldn't want to do. And that's why our group, the partnership that we've created, is is protecting everybody from that misleading information. And there's certain YouTubers out there that they tell you information like, March 3rd's the date. Well, okay, everybody's made a guess. They've been wrong. I'm not going to say everything that that person said is completely wrong. I'm just saying, like, come in like a man, say, missed it. This is what I thought. This is why I thought March 3rd was it. But instead of brushing it off and picking another date and saying, let's go to that one, or, they're saying that transparency is going to come in and save the world and Ginsler's going to save the world. And then all of a sudden you find out transparency is not going in, Ginsler's not doing anything. It's like, are we being lied to? Is it on purpose? It seems kind of intentional. And intentions is a thing that's important. If somebody comes out and they have best of intentions and they're trying to give you good information, if they make a mistake, they were trying honestly. But if somebody's coming in and they're misleading you and like they won't admit to their mistake or they double down and they tell everybody else that they're wrong, when like Tony went and debunked um, the transparency thing, well, then that one YouTuber came back and said, no, Tony's wrong. Maz hit him and said, look, you're wrong. I called the SEC and they said it's not in. And then that person still went and doubled down even more. And it's like, I think we have some people that are really fun and funny out there that are luring us in by being charismatic. And then it's like once they lead us to the water, they push us in instead of, helping us drink the water. And that's the thing I worry about is intentions, because like that's why I'm talking to you, is because I know you have good intentions. Your intentions is not to mislead people. So whether you make a mistake here and there or I make a mistake, the whole thing in the long run is we care about the people and we're doing what's best for everyone.
Yeah, I agree with that totally. One of my biggest things is uh, attacking the ideas and not the people. Because within the community of people who are trying to come up with ideas, they may not necessarily be good ideas, but it doesn't mean that you have to attack the person unless they legitimately have uh, bad motives for the whole group. But attacking the ideas and knowing that the idea is being attacked, and the person who has the idea, if they can take it from the perspective of this is a ulterior idea, then um, maybe that will help a little bit. But yeah, I like what you just said there. And for those of you guys who are watching, everybody had just mentioned a little bit ago that I had some buffering issues, and hopefully I've ironed those out since then. Um, I have I have really poor connection here, and I deal with it so constantly. It's terrible where I live. Um, so I'm gonna move into a question that you did not know about in advance, and I do this with every person that I interview. I always kind of lighten the mood a little bit. It's tough sometimes. Some of these questions, not all the questions are tough, but I just kind of like to lighten the mood. I heard you like poker. I'm actually a huge Texas Hold'em poker fan myself. Throughout the years, I've had a couple favorite starting hole cards that are considered that aren't considered great starting hands. What's your current non-traditional favorite starting hand?
Um, Usually anything that like a 6, 7, 7, 8, like anything that you wouldn't expect to be like powerful, but it kind of evolves off the flop or something, and you can get a position. I like ratios and numbers and stuff like that. Like, um, I look for like the best set of combo that I think is on the board, and then I work my ratios off of that to figure out like the odds of each person having what based upon what's on the flop. And the only thing that you can't see is like those pairs that are hidden. But um, we'll say if I have two clubs and I get two on the flop, I'll play the ratio out, waiting for that, you know, that last club to pop up. And it's not usually the most best way to play it, but the odds are kind of more in your favor if they're sitting on just a two pair, like just a pair, or whatever, and you can get an advantage there. And I also like to sleep my hands too when I know I'm winning, and I know I got them with like a special sleeper. I kind of drag my feet and I let the pot run up, and then I just kind of scoop it all in one shot. I get them to overcommit, and that's how I take most of the money too, is sleeping.
Yeah, that's so you're a suited connector kind of player. I like that. Suited connectors are especially they're good sleeper hands, really good sleeper hands. A lot of people see like 7-9 suited, or just some of those ones that are just kind of oddballs, 6-8, whatever you choose, 5-6. There's some pretty amazing numbers out there that can actually be some powerful hands. And I actually, believe this or not, I feel like I can tell a lot about a person based on how they play their poker. People have a lot of tells, and I've said this before. I pick up on people's tells all the time in their videos. Trey Collins, I'm not gonna tell you your tell, of course, but Trey Collins has this thing where when he's doing his videos, if he's a little bit unsure of himself, or he says something that he's not 100% certain about what it is that he just says, he always does this like that. He sniffs. It's really, really funny. I love it. I just can't get enough of those kind of tells, and I go like, okay, I see how you really feel about that. Thank you
Well,
for
the good
telling it.
thing about me is the good thing about me is I'm really hard to read, because if I'm smiling, it's not for the right reason.
Hmm.
Because if I look down and I see crap in my hand, I smirk. And because I'm just like, yeah, what am I going to do with this? And then I'm looking around saying, like, he's probably got a pair, he's probably got something over there. And I'm like, I'm just looking for the flop, and I'm waiting to just get pushed off the table. And I'm looking around and I'm watching them do their little telltale signs.
Hmm.
And I'm just watching the bluff game play out. And I just sit there and laugh because it's like obvious. And then when I get a good hand, like my thing is I look kind of sometimes scared because I'm not going to get enough out of my hand. So I'm just like, oh, there's no way he's going to fall for this. And so I get kind of like nervous looking, and it's like, can I get more from this guy? Like, is he going to actually fall for this play? And it's like, I'll raise it a little bit, and I'm like, I hope this doesn't scare him. And I'm staring at him. And then, like, and then they think I'm bluffing. I'm like, no, I actually got the hand. And, but I mine's backwards. Everything is so wrong with the way that I give off signals.
It's so much different playing computer poker than live poker, isn't it? It
Oh
takes
yeah,
away
definitely.
so
When you're
much.
playing computer poker, I mean it's more of a timing thing. You just watch how long it takes them to play.
Hmm.
And like when you're playing like online, basically I always drag it to the last couple seconds, and then I make my selection, because then they think that I'm thinking, and I'm like, I already knew what I was going to do.
Yeah, an hour ago.
Yeah.
Yeah, totally. I get you. Well, moving back into the more specific AMC questions, what do you think is the number one thing that Adam Aaron could do to strengthen the fundamentals for AMC? And I think every single one of us probably knows the answer to this, but what do you think it is? Because
Uh,
you might surprise us.
one comment I just seen pop up there. John said Froggy's a sandbagger in poker. That's almost exactly what I call it, as sandbagging. Like I play spades too, and I play the exact same way. Like very strategic. I read the whole table, and I kind of predict what's coming out of whose hand. But yeah, to answer that question, there's a lot Adam Aaron can do. But one of my comments that I made right from the beginning was the CMO, which is the Chief Marketing Officer of AMC. He came from Blockbuster, Radio Shack, and another failed company, and he didn't really help those companies very much. So I was very concerned about the guy, because Chief Marketing Officer is very important with getting the product out properly, and that's what happened with like Toys R Us. They got limited because they didn't want to convert to e-commerce. They were stubborn, and they went bust because they didn't evolve. And Blockbuster was an amazing company. I mean, real amazing company from the inside. And how they fell apart was they didn't evolve fast enough,
Hmm.
and they let people come in and take their market share without expanding.
Yeah,
And part of it was, chief marketing officer's problem, because they could have went and did a red box kind of thing, or they could have went and did like a Netflix kind of thing, and they were limited with a bunch of like, let's not do it. And that would have been his call. And it's like, this guy, he's either not seeing the big picture. Well, now he's leaving. He's like retiring on his own, and they're bringing another guy who is known for uh, working globally. He worked with hotel chains. I think he might have worked with Adam Aaron, but he looks like more of a go-getter and someone that's worried about being efficient and productive and stuff. And I think as long as he gets into the e-commerce part, everybody knows e-commerce is more efficient. So if you do anything online and you start having less overhead, I mean, they already got AMC on demand. Like, utilize it, because you got 9 million subscribers there that could turn into $9 billion worth of market cap. But you got to get them to move around, start getting movies, and expand that. Work your way up from 9 million users to like 50 million users. And then if you start getting them to purchase movies, like right now, if you get a movie from AMC on demand, it's like $4, and you get to keep it for one day. And it's like, well, you can go to Netflix and do the same thing over there, pay for the monthly membership, and you get to watch it all month. And but the thing is AMC on demand, those are old movies. So for $4, you can almost buy the DVD. So if they restructure it and give it to you to where you can keep it for, I don't know, the life of your account for $4, there's no reason for them to take it back from you. It's a digit. It's a digital, like, to add it to your account. Let them keep it for longer. Movies are really cheap. You can go to like Walmart and buy one for $5 to $7, and it's yours for until you scratch it.
yeah. There's something I wanted to touch on that though, real quickly. You said the board member specifically, and I don't want to. You already said the position, but what do you think about this? And this is not a question that you had prepared in advance, but what do you think about an ape representative or somebody part of the ape community as being somebody on the board? Do you think that we should have some kind of representation? I mean, if retail owns 90%, how many of the 90% are apes? And should they have some kind of representation? Because we just saw Ryan Cohen buy out Bed Bath and Beyond 10% of their total float, and he now has a spot. He now has a spot to be able to talk to the board to where he has direct contact. Where is our representation, and do you think that that's something that we should have?
I think there should be voting or something that's being done, because we should at least get a say so and stuff. We don't need to be per se on the board, but I would think that like a voting kind of thing that would happen more often should be better. But I don't know how much that actually costs for them to go through the whole voting process. Even if Adam Aaron did a poll on Twitter and said, do you like this idea, yes or no? And we went in and voted it, and that's where the numbers came up, and we seen it, and he reacted accordingly. Getting that much of appreciation or respect to the people that are actually paying attention, that's probably all he really needs to do. And I think that would give him a lot more appreciation for, like, we don't really need to plug someone into a spot to where they have representation on the board, as long as we're acknowledged in the idea process. Because I know that the Ape radio community over there, they're actually gathering up information. I think it's today, and they're going to go and present a paper with a whole bunch of our ideas, and they're going to physically deliver it to AMC, I think like in Kansas or something, and
KC.
they've already turned one in. They're going to do it again.
Yeah. Yeah, that's I've been on a couple of those space calls and have had some of those ideas have come from me, and it's an amazing list. Uh, it's really kind of cool. Changing the speed or tone of this a little bit and taking this more towards you and not specifically AMC, but um, I personally don't believe in setting price targets, floors, or ceilings for the MOASS. But what market indicators are you going to be looking at helping you to decide when to sell your position out of AMC?
Um, well, there's an easy one that everybody's going to be paying attention to. I'll be paying attention to it as a get ready, because I'm expecting first wave to work off the Ortex. And when all the shares on the Ortex get covered, they're going to try to trick us into thinking it's done. And if there's a lot more synthetics out there, which I suspect and I believe, I think they're going to pull a trick where they're going to run the price up. You're going to see the Ortex short value drop, and they're going to say play's done. And then they're going to start dropping the price back down. Well, don't fall for it, because if they haven't returned all the shares, they're not done. And that's the first wave. There's going to be a second wave, probably a third, maybe more, who knows. But I follow the money indicator. I pay attention to the money flow, the cash flow, and it gives me an idea of like how close to being back to balance the stock is. The money has to get offset with based upon the stock price, the stock trading, and stuff like that. And when you follow the money, it will get me close to where break even is, because either the stock price has to come down to match the money flow, or the money flow has to come up and match the stock price. And when you see both dropping, that means that when the money indicator comes back up to zero, the stock price will be way higher. And the money will have to come in and match up with the stock price at some point. When it gets there, that will be an indicator that we're pretty close to being done. And it's not that it's done, because the damage that's been done to it for such a long period of time could be more because it's compounded. And there's a good chance that it could be much higher than what I'm looking at. Now, I've done estimates, but those are only just estimates, because the price can range a lot, because this play is probably, there's more corruption. I don't want to say more synthetics than other stocks, because there's other stocks out there that have a lot more synthetics, but they don't get the squeeze. They just burn up and disappear. Like Blockbuster, they get taken off the table, the shorts disappear, and you never get to hear about it ever again. Well, this company is going to make all that come to light, and that's how we're going to get paid. And so it's basically kind of unprecedented. So the numbers are, in my opinion, there should be at least several thousands of dollars, and I just don't know what the true range is going to be. It depends on holding. If nobody's willing to sell them at those prices, and we say, look, we're holding until you all go bankrupt, there's a chance that could happen. And but there's a fine line in there, because if they all go bankrupt and there's no money left on the table, you can't get any of your shares to sell. So you got to find that fine line of getting the max out of your return. And like I said, I'm waiting for Goldman Sachs to close their doors. That's the first one. Once they say we're tapping out, I'm like, we're close.
Yeah.
Because they're the one with 136 times leverage. They're the worst of all of them. So if that one does, and when that one blows up, they're going to blow the rest of them up. So it's the domino that we need to fall.
Yeah. This is more of a technical. I only have two questions left here before I open it up to everybody else who wants to ask questions from either your chat room or my chat room or wherever they may be. But so there's just two last questions, and they're more about technicals. Are you a big fan of the VWAP or the MACD, or do you have other indicators that you use in conjunction with as an alternative to commonly used market indicators? For example, just on my side, I'm a big fan of Vortex Indicator, and it's just something that I have grown to find and love more than the more traditionally used VWAP. So, just what do you have any specific ones that you kind of follow that you think are not traditional?
I do have one. It's kind of more of a like a I don't want to say a secret, but I'm not allowed to tell it because I was told it's like special. But it's just basically you follow the money, and every stock is like that. Following money momentum, cash flow. Like if you follow the money, you can actually figure out direction, timing, momentum. You can see reverse a trend. The stock sometimes doesn't even move down when the money comes out. Like there's a delay. So if you're watching the money move in, the price you know is going to move up. And if, as long as you're paying attention to the cash flow, I mean, it's like a pre-indicator, kind of like an RSI, but it's a lot more accurate. And now that changes whenever it's being shorted. When it's being shorted, you'll see the money come out and it drives the price down, and that money never returns because they're basically stealing it from the company. I do like the VWAP. That's really good indicator because it gives you an idea of the battle range between shorts and longs. And you can see whenever the longs overprice it, the shorts attack. And then whenever it becomes oversold, the longs step in and pick it up. And then the MACD, that's like an always kind of thing. It gives me like nice direction. And then I pay attention to the 2 hour for the weekly trend so I can get a direction of where the overall is going. And then I time my entries off of like a 30 and a 15 minute. And then if I want to get real detailed, I get down to the 5. And that's just so I can time the entry for the 15.
And that leads right into the last question, which is what do you feel is one of the most undervalued market indicators that you like to teach about, or that you would like to teach about in the future? Because I know you said you had talked about wanting to show people how to play their money after this is all said and done. What would be one of those undervalued market indicators? Or did you
Um,
just pretty much say?
well, there's one that I use. It's not an I don't know if it's an indicator, but it's a tool that I use. There's two of them actually. A lot of people don't use StockGrid.io,
Hmm.
and that's really helpful for looking at dark pool information. It tells you what they're holding, and then you can kind of tell that if they're holding, they're confident, and it's bullish for you. So then you should have confidence too. But they can also sell at that point, so you always want to try to figure out what they're holding, and then you can just hold, an offset to that. And then Max Payne, that maxpayne.com site that I use, it's been very helpful for finding out when it's overpriced and when it should be going back up. But it helps like give you like a visual on the option chain, so then you can make a decision like GME finished down under Max Payne for the week, bringing in the put options, which means Monday it's probably going to get hit a little bit, and it's going to be normal. So if anybody panics on it, just it's not that the market's getting driven down. There's a bunch of puts that need to be covered at that point that they're not covering, and it was already kind of basically baked in on Friday.
So what I'm doing right now is I'm actually filling in the chat box. I'm actually putting in the two links that you just asked about because I actually keep those open on a constant basis. The maximum pain, guys, if you do click on that one, that's going to be leading you straight to AMC, but you can just plug in the whatever stock it is that you choose to look at, and you can view the max pain through that. But there's the two websites that he specifically was talking about. Um, yeah, I'm in total agreement with that. So that's the end of my questions. I don't have any other further questions for you, Froggy. And like every interview I've ever had, I always try to keep them to 45 minutes, and here we are at an hour and 5 minutes. But I'm gonna try and scroll through and see if I find some questions here in the chat box that I can ask you. Otherwise, if you have any questions from yours that you'd like to answer, or, one thing I got was Keto had Can you, so Keto had asked me to explain my thoughts on the bubble being inflated and what you think of the and what's your take on it. And basically I was talking, this is in reference to dilution when we were talking about that. And specifically the way that I've described dilution to everybody on the stream is it's like a water balloon. And so what you have is, and it's, I would think of it as inflation, right? But I like to call it dilution as something a little bit different as inflation and thinking of it separately in terms of because whenever they dilute, it's the same thing as when we see the American government print money and put it into the market. It's the same thing, right? It's just a value or a number that's being injected into the marketplace in order to basically inflate. And so what I like to think of dilution is you have a small water balloon, and so when you're blowing it up with this small little tiny balloon with air, uh, at some point the inflation that it takes to blow that up to the point to where it pops or has a failure is the amount of inflation that it takes to get it there. Now, when you dilute or you increase your float size, basically what you're doing is you're creating more elasticity inside of your balloon. So now instead of having a small water balloon size balloon, you may now have a party size balloon, and the amount of inflation going into the balloon to take it to get it to that point to where it pops is much more. Meaning there needs to be more buying pressure and more time in order for there to be inflation enough to get to where there's a failure, or in other words, the popping, which is the squeeze. So one of the things that I also mentioned too, though, is that when you have a small balloon that pops versus a large party balloon that pops, which one is going to make the louder sound? And it's obviously going to be the bigger one. So there are benefits to dilution, even though it may cause more buying pressure needed over time, it also creates a bigger nuke size hole in the ground when it does go off. So I guess Keto wants to know how do you feel about that? I, you don't have to challenge me. This is not there is no right answers or wrong answers here. This is just an idea.
Well, as far as the inflation part, I'm not sure if dilution actually creates inflation. But I do know what the government's doing by pumping in money is creating the inflation. So you're seeing the housing market, the oil prices, stock prices, and stuff like that being inflated. So that's that balloon you're talking about, and they're everywhere right now, and they're all ready to pop. So I don't know if one's going to pop and blow up the next one, and then the next one, and then you're going to have an entire wipeout across the market. I don't know if that's the way it's going to go. It really looks that way, and it's kind of scary because, like, I was not a fan of 2008, and
No,
this looks like it's setting up like it.
yeah, those house prizes killed me in 2008. Absolutely killed
Well,
me.
look at, like, my house price is up like 30% in the last like 2 years, and I'm like, this is nuts. Like, there ain't no way my house is worth that much.
Mine doubled.
And yeah, it's way up there,
Yeah.
and I'm just like, it's gonna come back down. I don't understand why they're, when they put all that money in there, like, it's never a good thing for the middle class because we pay more for everything, and they're not doing anything. They're like, it's transitory. Yeah, right. And then they're blaming Russia for the oil, and I'm like, we only get 1.4% of our oil from Russia. So how is what Putin's doing infecting or affecting our oil prices over here? And it's due to, like, regulations and shutting down, like, the pipelines and whatever. All the things that they're doing over here is self-sabotaging our prices, and they're blaming Putin. It's like, I can see what's going on.
Yeah. Nosa had asked a question. She said, "What's your take for prices for AMC GME after MOASS? Which level do you think it will be around?"
um how high I think it's going to go.
I think she means more like after MOASS, meaning like where are they going to settle at afterwards?
Well, AMC is a little bit harder for me to figure out where it's going to settle at because, um after all the dilution that they've done at this point, um and it depends on how many people want to stay in it and hold it for a longer period of time. I would think that AMC is going to be worth over $100 a share after it comes back down, but that's just a guess. It could be 100 to 300 and it would stay there. But it depends on like how many people are so sick of the play and they just run away. Um, GME, I think, is going to be worth about $1,200 a share, between 6 and 12, and that's without any kind of dilution that goes on the way up. If they dilute and they lock in, it changes the whole number by a lot. So if they don't dilute, that's where I think they're coming back to down to about $100 to 300 for AMC, and about 600 to 1200 for GME. And like I said, dilution, 10% would probably lock them in at like 200 some $1 billion, but that's just how it works.
Yeah, I've got so Najib has come on and started posting a letter to us. Najib, I'm not sure where. I think he wants us to just kind of comment on this. Is kind of like, did you have any questions from your side at all?
Yeah, if anybody in the comment section, on my live chat, if you guys have any questions, go ahead and throw them up there right now. Um, let me add some stuff in there. I'll put a line in here. Anything after the frog will be a question that I'll try to ask. I'll just pick out a couple. So go ahead and ask some questions. Um, Stevie asked, what do you think about Teddy Zane claiming today's video that the reason AA sold at 33 is because there are no synthetics and the hedgies are playing us? Um, I don't know. I think that's more of a, everybody's going to have their own conclusion on stuff. And it's tough to really know exactly why Adam sold. I mean, he said he was selling it because of, like, he was just trying to get into like diversifying stuff. And each person's going to have their own reason. We'll probably never know the actual truth. I mean, it made sense to sell out when you're on the top, I guess, but the no synthetics thing, it's it's a thing that I've been looking at. If there's not synthetics, it's a whole bunch of borrowed shares, which is, you know, it still has to be covered. So um, let me see if I can explain this. If there's a whole float out there and they sell all the shares and then they borrow them all from everybody and then they lend them out and then they short attack the entire float with all the ones that they lent out, when they short it, there's a buyer. And then when that person buys it, they can lend out those shares. So you can have two floats out there. So then they can borrow those again and then re-short attack us again, which creates more buyers. And you can have three times the float. So technically, those are not synthetics. But we use the term synthetic because we understand that there's more than a float out there and you have to give them a name. But it's called rehypothecation. And this is a thing that they've been doing. It's a loophole where they borrow and borrow and borrow to infinity, and they sell or short as many shares, and selling it is still shorting it, and shorting it is shorting it. So um, no matter which way you look at it, there's a good chance that we have more people thinking they have shares, but they're probably all on loan, if that makes any sense. What do you think of that one, Casey?
Yeah, I like it. I actually am sitting here writing and unfortunately couldn't pay attention as well as I would have liked to, but I heard you say the rehypothecation of the shares. And so what I always describe it as is every single share that we have is a placeholder um, that basically says like this is an IOU. I owe you. Our broker tells us I owe you a share. So when it comes time for us to sell our share, they basically take that. They take a share that they have to either purchase or that they own, and then they assign that share to you and then sell it to the market. So they've eventually got to have the share at some point or another. But I don't really like to think in terms of like our shares on the, in our brokers as being real or not real. But as far as rehypothecation of shares inside of our brokers, 100% they are loaning out shares that they do not have. And we actually have proof of it in the 13G filings from both Vanguard and BlackRock, which I posted a Reddit post on the proof of that through their 13G filings. That they literally had sold off so much of their position that there was no way that they could have had 120 some odd million shares on loan uh, during the time when they sold in November and managed to. still keep those on loan and sell as many shares as they had to report on their 13G filing. So, I mean, it's clear evidence that they're selling shares that they don't have. And so if they're
Yeah,
keeping,
they're borrowing them.
yeah, absolutely. Let's see.
It's a dirty role that I've never liked since I figured out what it was. And then like on top of it, like when you start figuring out the other mechanics like internalization and stuff like that, it's like, man, they have all the tools to completely control a stock.
Mhm. Yeah, I've also noticed when you talk about tools for controlling stock price, I've noticed that there has been some changes that we've seen over the last, I don't know, I want to say like 4 or 5 months that have changed and has caused me to think that who's in control of price has actually changed a couple times. And I don't even want to speculate who has control, but I do believe based on the way that you see the trading happening, there was a period of time where long institutions were actually in control of price because all you saw was on-off switches. Price would go, you'd see these massive V movements where price would either go down or up, and there was no in between. And hedge funds, when they control price, typically what happens is you see a lot of different methods by which they can control price. So you see a lot of fluctuations in price instead of just up or down, and that's it. So, but I don't want to make any. This is about you, not me.
Well,
Uh,
there's one thing that I've been paying attention to, and it's obvious that they're doing like shenanigans. And this is something for everybody to watch. You go onto your trading view to your 1 minute time frame, watch the market open up. And what's going to happen in the market is when your orders come in, like people aren't planning these things and they're all buying at the same time and all selling at the same time. When they come in, it's like a deck of cards that are all shuffled. It's red and black, like basically up and down. And when you flip those cards over, it should kind of just hop around a little bit back and forth and go sideways. And if there's a ratio, you should see one side slowly win. In the morning, you see volatility, this barcoding thing where the market starts and they turn off all the sell orders or like a huge amount of them, and then the price will rip up or rip down, and then they valve it the other way, and then it rips the opposite direction, and they do that back and forth until all the orders that need to be put in the market get put in there. Then it goes back to normal.
mhm.
Well, that's not a normal thing if it wasn't manipulated. So when their system is getting all the previous orders back like on the books, they don't come in the same time order that they received them. They go through and they filter them things out and they categorize them, and then they sprinkle, buy orders first, then sell orders, and they create these swings, and then you could take advantage of those swings and make money. And that's not normal. That is 100% somebody's taking advantage of the market and creating it. We know who's doing that, market makers. So um, that needs to stop for one, because that's not even what we think of a market is. When we think of a market, we're thinking when we put our buy order in, our order gets executed within seconds later,
Yeah,
and
no,
here it gets executed like days later.
right.
And it's like, wow, this is weird. We're being told we got it, but if we were buying a car and it didn't show up for 2 days later, we'd be angry. But stocks, we don't need it right now, and we get IOUs, and then they get covered eventually. It's so shady.
I had this really weird thought process the other day, it just kind of popped into my head, and I'm not suggesting we do this by any means, but if you wanted to think of it as it's a car dealer with a car showroom car that he knows is never going to leave his front showroom floor, but he sells the pink slip to 10 people. And so 10 different people have the pink slip, right? But he knows that none of us are ever going to drive the car out of the dealership. He just knows that at some point somebody's going to choose to sell their pink slip to somebody else, or maybe they sell it to back to him or whatever, right? But how could somebody feasibly check the car out of the dealership and screw him over from basically holding 10 pink slips and having to give that one person a pink slip as they drive out of that dealership? Is there a way that could be done? And I think there might be, but I'm going to let people put on their thinking hats because I hate giving away the answers. I think that there might be a way that you could force him into letting you check out the car and move it. Now, this has nothing to do with computer share because everybody knows I'm highly against computer share and direct registry of their shares, just because I don't believe that it violates some of my golden rules for how you sell your shares or when it comes time to sell your shares. It violates some of those rules, and I've gone through the process of actually buying a share through computer share to show everybody the whole process. And it just violates my rules, so I would never do it. But it's along those lines. It is along those lines, and I'll just leave it at that. But it's kind of an interesting idea to think about if you could somehow manage to check the car out and move it, and I'll just leave it at that. It'd be kind of an interesting
Well,
exercise to think about.
well, since you drew it up in that perspective, that's considered more of like a naked shorting. You're selling things you don't own. You only have one, you sold 10. But what rehypothecation is where you sell one, then you borrow it when he doesn't know you're borrowing it. Then he sells it to the next person. Then he borrows theirs and sells it to the next person. So each person has had it at one point, and they all lost it because he sold it to all of them, and he got to keep all the money. It's the same thing, but it's kind of more legal by the way that they do it. You never own it in the first place. Um, but on how to bring the price up, now in theory, if we just kept buying, we can hold the price up, push the price up. But when they can create these things indefinitely, and you can suppress the demand by creating artificial supply, that means you can always drive the price down. And there's almost no way that you can drive the price up without inflation. And guess what's happening now? Inflation.
Hmm.
So pain's coming for them in that aspect. And like at some point, the price has to reflect or it becomes obvious. So if you look at it in that aspect, if there wasn't inflation, this wouldn't be as noticeable because that's how the prices are supposed to be higher and they're not.
Somebody actually guessed. Somebody guessed the question. Real Rugged said dealer transfer. That was the answer that's the correct answer that I would have uh, suggested.
Oh, you mean switching out from one broker to another?
Yeah, essentially.
I was I've been wondering that because if you notice some of them are charging you $75 to transfer out.
Right.
And it's like before it used to be free. Why does it now cost money? Because
But
they
see,
don't want to have to cover them.
exactly, and that's the other point I would suggest too is if you did switch them out, if everybody did it, and see this is the part that this is where it gets very shady and you can't talk about this kind of stuff, and why I'm very careful about not going into great detail about it because it would be considered market manipulation. But if people did it all at the same time and decided to move their shares from one location to another location, it would create mass chaos inside of the market. Just it would just I have a feeling it would cause mass chaos. But that's I'm not going to go down that road, and I'm not going to suggest that anybody should either. Also, somebody wanted me to mention this to you, and I'm just going to let you know in case you ever see this. We've had some fun on this channel, and we've gone to live streams, and we've done I think it's called sniping, stream sniping, and basically gone in and just spammed messages. If you ever see 2 weeks come up in your screen, I just want you to know that it's not me saying that it's going to happen in 2 weeks, but it's I get asked that question quite often where people will say like, when do you think this is going to squeeze? And I've resorted to just saying 2 weeks from now on when everybody says it, and it's just kind of turned into. I don't know if you ever saw the movie The Money Pit with Tom Hanks. Did you ever see that movie?
Yeah.
Yeah, so they ended up with a beautiful mansion in the very end, but through the process, that they kept tearing down the house, and the construction workers, they'd ask them, "How long is this going to take?" And they'd always say, "2 weeks, 2 weeks." You sound like a parakeet, and it's so it's just kind of a line that we do now. So if you ever see people show up on your channel and say 2 weeks, just know it's just fun. It's just people are having a good time, trying to make trying to make some fun out of this. Um,
Yeah. Got to definitely enjoy the process, even though sometimes it feels kind of painful when it's always red.
yeah, yeah, no kidding. Somebody said here, I'm probably going to cut this off at this question right here, just because we've gone into so much time here. Dr. Zeno wanted me to ask you a tough question here, and he said, not FUD. I love it when people always put that first. No offense, Dr. Zeno, but but why is hardly anyone talking about the fact that the shorts could stay dug in for years? That's the question.
Well, see, the thing about a short, that short thesis that they keep talking about saying it's being destroyed, when you know that, like, the longer this goes, the more money we make. So, in theory, because if they run out of money, that's all you can make. So, um, the fact that when the company turns back to profitable, that's a big red light for the shorts. They should be saying, okay, we need to get out of this thing before it blows up and gets way worse for us. And if they want to stay in, that's fine, but they won't have a career after it's over because once the value continues to grow, and they want to keep driving the price down, it becomes obvious that they're too far in, and the price eventually is going to end up exploding the other way. There's a thing called diminishing returns on shorting, and as long as we keep pumping money in, like what happened to Tesla, you keep pumping it in, pumping it in, pumping it in. At some point, you know it's going to just break, and when it breaks, that's where we get that squeeze. And so the idea they can do it forever, yeah, in theory, but once we turn that profit and it's proof, there's no reason for it to be going down. It's still going down. The whole market's going to see it as being oversold. That's why I came up with the 13.25 price, saying that's like the bare bottom before you're actually one for one on the actual asset value of the company, and it should never be that low. So that's the bare bottom price. And when you start getting retail paired up with hedge funds, paired up with all these other places that are buying it because it's oversold. I mean, that's a recipe for disaster, and that's the diminishing returns.
Yep. One last, real quick question. How'd you get your Froggy Styles name?
Oh, good question. Back in second grade, there was a song called "Jeremiah Was a Bullfrog," and my name is Jeremy. So then, like, of course, you always get pointed at, and you're like, "Hey, Jeremy, Jeremiah was a bullfrog," and I'm like, "I'll take it. That's fair enough." And went with it, and it's kind of stuck with me all my life, and I kind of enjoyed it. It's like we have a radio station that popped up over here. It was Froggy 10 whatever, and like it was pretty cool to have a radio station called Froggy, and then we had a bar over here. It was like Bullfrog's Pub, and like people like the whole Froggy thing, so I just kind of took off.
I like it. I think it's cool. Well, we're gonna have to wrap this up. It's been much longer than I really wanted it to be. And I always think that the reason for that is because I enjoy talking to people and getting to know them. But I really want to thank you, Froggy, for taking your valuable time and donating it to the community for us to get to know you. Sometimes we kind of get caught up in our own YouTube streams and we never really have the full opportunity to tell our personal story. My views is that I'm here to document history, and you've just gone down in history books. Did you have any last things you wanted to say?
Yeah, I'm gonna first of all apologize to anybody that did ask a question I wasn't able to get to. I'd like to have gotten to all your questions. I know there's probably more in there, but make sure you guys stop over at Casey Shaw's channel. The link is provided up top. I got it pinned up there. So go over there, give him a subscribe, like some of his stuff, help him out because he's here doing good work for everybody, and he's trying to look out for all of us. And we should help support the people that are their intentions are good and pure, and that's what's really important is that we work together as a community, as a great big team to help the entire movement grow. And like I said, that's the reason why I wanted to bring Casey on here, so then you guys can get to see him, get to know who he is, and realize he's one of us. So um, it was actually nice to get to meet you, talk to you, and realize that we all have the same idea, perspective, and intentions. So that's all I got to say, and I'll let you close it if you want.
I always like to close these interviews out with a quote. In your Twitter profile, you said, "I fight to defend retail from market manipulation." I want to thank you for your dedication to educating others by seeking knowledge and truth. As Frank Herbert once said, belief can be manipulated, only knowledge is dangerous. So thank you for your efforts in making the common investors dangerous to a manipulated system. But it is that time of the day, guys. Eat, sleep, drink, get plenty of rest. The weekend is almost over. We have another day to trade tomorrow and many more days after that, 2 weeks. Spend time with your family, spend time with your friends, spend time with your pets, spend time with your kids, whatever you want to do, but go out and do something. But above all else, don't have a good day or a good rest of the weekend. Have a great one.
Later, guys. Thank you for coming. Peace.